Good morning and welcome to T-Hub Capital, the Investors Lounge, the podcast where we explore financial market dynamics, emerging trends, and the insights that shape successful investments. Each week, we'll delve into the strategies and analyses that drive our investment decisions. You'll get an insider's perspective on the factors influencing markets and the potential winners and losers of tomorrow. Subscribe to the podcast to stay ahead of the curve and make informed investment choices. Enjoy listening.
Welcome to T-Hub Capital's The Investors Lounge weekly newsletter. Today's date is the 26th of May. Let's dive into the week's stock market news. Trade tensions rock European markets amidst mixed economic signals. European markets experienced a downturn, with the pan-European stocks Europe 600 index closing 0.75% lower in local currency terms, breaking a 5-week streak of gains. This decline followed an announcement by US President Donald Trump, who stated he would recommend a 50% tariff on goods imported from the European Union. Major stock indexes across the continent largely reflected this negative sentiment. Germany's DAX decreased by 0.58%. France's CAC 40 index saw a sharper drop of 1.93%, and Italy's FTSE MIB recorded a loss of 2.90%. In contrast to the broader European trend, the UK's FTSE 100 index managed to gain 0.38%. Economic activity in the euro area unexpectedly contracted in May, as indicated by preliminary purchasing managers' surveys compiled by S&P Global. The HCOB Eurozone Composite PMI fell to 49.5 from 50.4 in April, with readings below 50 signaling a contraction in business activity. This decline was largely driven by a sharp deterioration in the service sector. Germany experienced a contraction in business activity, and French output also shrank for the 9th consecutive month. Adding to concerns, the European Commission (EC) revised downward its forecast for economic growth in 2025 to 0.9%, a notable reduction from the 1.3% projection made in late 2024. This downward adjustment was attributed to rising tariffs and the uncertainty surrounding U.S. trade policy. Despite these growth concerns, the Commission's latest estimates suggest that inflation is expected to reach the European Central Bank's 2% target by mid-2025, which is earlier than previously anticipated. In brighter news for the region, Germany's economy recorded a significantly higher growth rate in the first quarter, expanding by 0.4% sequentially. This figure doubled the initial estimate and marked a rebound from the 0.2% contraction observed in the final 3 months of the previous year. The strongest economic pickup in Germany since the third quarter of 2022 was propelled by robust household consumption, increased fixed investments, and a positive contribution from net trade. Across the English Channel, economic data from the UK presented a mixed picture. The country's annual inflation rate accelerated to 3.5% in April, reaching its highest level since January 2024, up from 2.6% in March. This increase was primarily driven by higher utilities and housing prices, surpassing the 3.3% increase expected by analysts polled by FactSet. Separately, retail sales showed a strong performance in April, rising by 1.2% from the prior month and 5.0% year-over-year, significantly exceeding expectations. Consumer confidence also saw an improvement in May, although it started from low levels, according to surveys from GfK and the British Retail Consortium. Conversely, private sector activity in the UK contracted for the second consecutive month in May, as indicated by purchasing managers' surveys. A modest expansion in the services sector was insufficient to offset a sharp deterioration in the manufacturing sector. Now our insight into alternative markets, the general partner in private equity, the cornerstone of fund success. In the intricate universe of private equity, The general partner GP serves as the pivotal element determining a fund's triumph. As the apical figure, the GP is responsible for capital raising, pinpointing lucrative investment opportunities, meticulously managing portfolio companies, and ultimately delivering robust returns to limited partners LPs. For investors, the judicious selection of a GP is paramount, given that their specialized knowledge, strategic foresight, and operational prowess directly dictate the fund's overall performance. This analysis delves into the fundamental criteria indispensable for evaluating the most suitable general partner, spotlighting Blackstone Inc. as a preeminent global leader in the sector. Essential criteria for general partner evaluation. To effectively assess a general partner, investors must meticulously scrutinize a multitude of factors that collectively underscore their capacity to manage a fund with efficacy and consistently generate superior returns. Foremost among these is the GP's track record and performance. A firm's historical performance serves as a primary indicator of its competence, requiring investors to evaluate metrics such as internal rate of return IRR, multiple on invested capital MOIC, and the consistency of these results across varying economic cycles. A demonstrably strong track record not only attests to the GP's aptitude in securing high-quality deals but also reflects their skill in enhancing portfolio company value and executing timely, profitable exits. Furthermore, a GP's established reputation and inherent star power frequently serve as magnets, attracting discerning LPs and streamlining capital-raising endeavors. The investment strategy and focus adopted by the GP must seamlessly align with the fund's specific objectives and the investor's individual risk-return profile. While some GPs exhibit specialized expertise in particular sectors, such as technology or healthcare, or adhere to distinct strategies like leveraged buyouts or growth equity, others may pursue more diversified approaches. Regardless of the chosen path, a clearly articulated and disciplined strategy, underpinned by profound industry expertise, is absolutely vital for adeptly navigating market complexities and cultivating value. Beyond mere financial engineering, leading GPs distinguish themselves through their operational expertise and value creation. These firms engage actively with portfolio companies, implementing direct operational improvements that may encompass optimizing management teams, streamlining internal processes, or leveraging proprietary networks to foster growth. GPs endowed with robust in-house operations teams are uniquely positioned to furnish portfolio companies with critical strategic resources, thereby significantly enhancing performance and ultimate returns. The intrinsic quality and stability of the GP's team experience and stability are equally crucial. Investors should meticulously evaluate the cumulative experience of key personnel, including senior partners, vice presidents, and analysts, alongside the firm's proven ability to cultivate and retain top-tier talent. A stable, experienced team fostering a collaborative culture is inherently more likely to execute complex deals effectively and adeptly manage inherent risks. A transparent alignment of interests between the GP and LPs is fundamental, typically evidenced by a compensation structure where GPs earn a management fee ranging from 1 to 2% of AUM and carried interest representing 20% of profits above a specified hurdle rate. Moreover, GPs who commit a substantial portion of their own capital to the fund, frequently between 1 to 3%, demonstrate genuine skin in the game, unequivocally reinforcing their commitment to shared success. Effective GPs prioritize risk management and ESG integration through meticulous due diligence and judicious portfolio diversification. Increasingly, environmental, social, and governance ESG considerations are becoming an indispensable component of both risk assessment and value creation. GPs that seamlessly integrate ESG factors into their investment process are often able to enhance long-term returns and appeal more effectively to socially conscious investors. Finally, The GP's proficiency in establishing efficient fund structure and governance is paramount. Funds are typically structured with clear limited partnership agreements (LPAs) that meticulously outline fund terms, including duration commonly 10 years, intricate fee structures, and the protocols for distribution waterfalls. A transparent governance framework is essential for ensuring accountability and rigorously safeguarding LP interests. Blackstone Inc., a global benchmark, Blackstone Inc., headquartered in New York, is globally recognized as one of the preeminent private equity firms. It secured the top position in the Private Equity International PI 300 ranking in 2024 for capital raised over the preceding 5 years, with over $1 trillion in AUM and 85 portfolio companies, embodying the qualities of an exceptional general partner. Blackstone's private equity arm has an unparalleled track record, consistently generating robust returns that have, over the long term, outpaced major public market indices like the S&P 500. Its remarkable ability to navigate diverse market cycles powerfully demonstrates its inherent resilience and strategic acumen. The firm employs a diversified investment strategy spanning various industries, including financial services, technology, and consumer goods. By strategically balancing its private equity endeavors with investments in real estate, credit, and hedge fund solutions, it effectively mitigates sector-specific risks while expertly capitalizing on synergistic opportunities. Blackstone's operational excellence distinctly sets it apart. It maintains a dedicated operations team who collaborate intimately with portfolio companies to relentlessly drive growth and enhance efficiency. This hands-on, proactive approach ensures that its portfolio companies consistently outperform. The experienced and stable team at Blackstone, led by prominent figures, collectively brings decades of unparalleled experience. The firm's exceptional ability to attract and retain elite talent guarantees data-driven decision-making and flawless deal execution. Blackstone's aligned compensation structure adheres to industry benchmarks, with partners committing substantial personal capital to the fund, ensuring strong alignment of interests with LPs. The firm demonstrates robust risk management and ESG focus by seamlessly integrating ESG considerations into its comprehensive investment process, acknowledging their profound impact on long-term value creation and attracting institutional investors. Blackstone's proficiency in establishing an efficient fund structure is evident in its funds, which are typically organized as limited partnerships, governed by clear LPAs that meticulously define terms, fees, and distribution protocols. Why Blackstone stands out and considerations for investors. Blackstone's preeminent standing as a general partner is fundamentally rooted in its exceptional ability to seamlessly integrate scale, profound expertise, and continuous innovation. Its immense AUM testifies to its unparalleled capacity to consistently attract leading institutional investors, a direct result of its unimpeachable track record and formidable operational prowess. Its astute strategic pivot towards growth equity and diverse alternative investments, coupled with an unwavering focus on cutting-edge technology and sustainability, uniquely positions it to expertly capitalize on emerging market opportunities. Blackstone's expansive global reach and its highly effective thematic investing approach empower it to consistently identify high-conviction opportunities. Its proven agility in adapting to dynamic market conditions ensures remarkable resilience and consistently robust performance. However, investors must acknowledge that no single firm can be universally deemed best for every fund. Smaller or highly specialized GPs may offer unparalleled niche expertise or potentially deliver superior returns within specific sectors. Consequently, investors should meticulously assess GPs based on their precise investment objectives. It is crucial to evaluate the GP's inherent capacity to effectively manage potential conflicts of interest. Transparency, robust governance frameworks, and a strong LP advisory committee are critical mechanisms. Finally, while past performance serves as a powerful indicator, market conditions and team dynamics are subject to change, thereby necessitating ongoing, vigilant due diligence. In conclusion, the selection of the optimal general partner for a private equity fund demands a rigorous and multifaceted assessment encompassing their track record, strategic approach, operational capabilities, team composition, alignment of interests, risk management protocols, and governance framework. Blackstone Inc. stands as a prime illustration of these exceptional qualities, skillfully leveraging its immense scale, deep expertise, and consistently innovative approach to generate outstanding returns. By establishing such an elevated benchmark within the private equity landscape, Blackstone serves as a definitive point of reference for investors who are seeking a truly world-class GP. Nevertheless, investors must meticulously align their choice of GP with their distinct investment objectives, thereby ensuring a partnership that is optimally structured to maximize value and comprehensively minimize inherent risks. For individuals contemplating private equity investments, various platforms can significantly streamline the process of becoming an LP, providing invaluable access to top-tier funds and essential educational resources to adeptly navigate this inherently complex asset class.
Thank you for listening to this episode of Hub Capital, the Investors Lounge podcast. I hope you found this content interesting and inspiring. If you enjoyed this episode, don't forget to subscribe to the podcast so you don't miss a single episode, and share it with your friends and colleagues who might be interested. To learn more about T-Hub Capital and our activities, visit our website, hubcapital.com. You can also follow us on our LinkedIn page. See you soon. All the best from the T-Hub Capital team.